COVID-19 webinars. Those of you who have been following this series, we started it up very much at the beginning of this pandemic. And as always, we want to get the experts in front of you to present our views and the evolving insights around COVID and the impact it has on the energy sector. So with that, myself, Matthew Watson, I'm very happy to be joined by the co-founders of Rystad Energy, being Jaren Rystad, our CEO, and Per Magnus Nisveen, who's in analysis. These aren't just the two figureheads of the company, they're very much the two people who are driving the analysis on COVID and of course the impacts it has across the energy sector. So it's great to have them here, and I look forward to hearing what work we've been carrying out and some of the new views and insights that we want to share with the audience. Those of you who haven't attended any of our webinars or not too sure exactly what Rystad Energy do, I'll just take a couple of seconds just to give you a bit of insight in terms of why we can present these types of views and what we represent as an organization. And Rystad Energy is a global thought leader when it comes to insight into the energy markets. We're an independent energy research and business intelligence company, and we're positioned very much globally. I'm headquartered out of Oslo, but present in all the major hubs. And we look at the energy market and categorize this into 5 key themes, being the supply chain that supports the energy industry, the movement, and of course the important sector around renewables and power, looking at traditional oil and gas, understanding the commodity markets and the movements between each one, and of course the key talking point at the moment, which is energy transition. And we very much come into developing our insights and what we offer to the market through trying to be as complete and consistent as possible. And this really lends us a really strong starting point to be able to analyze something like COVID-19 by using the infrastructure and the way that we conduct our analysis to be able to provide this. And this has really put us in a position where we can become a thought leader on this topic, and we're really excited to continue to share these views, which is what we are going to be doing today. Majority of what you'll be seeing today is coming from what we call our analytics. We deliver our intelligence through 3 mediums, very much delivering the actual raw granular data, compiling this into reports, commentaries and fact sheets through our analytics library. And of course, we have a very developed and strong advisory team supporting our clients. And what's going to be presented today is very much, like I say, out of our analytics library. But on COVID, we also have all this raw data. And those of you who are clients, we have COVID dashboards, which allows you to really dig into the underlying demand data around COVID and really understand our view on the pandemic and the impact on the industry. So those of you who are clients, feel free to kind of look into those dashboards. You have access to them, and anybody who's listening to this, we do deliver a free simplified report to the public, but of course we do have more detailed analysis and data behind it available. So anybody who wants to kind of understand more about our capabilities within this, please reach out. And those of you who've attended our webinars, we want to make this interactive, and we want to understand kind of what are the burning questions and thoughts on your mind. So you'll find that on the webinar software, there is the ability to post questions. Please, throughout the presentations that Jaren and Per Magnus deliver, jot down any questions you want to ask. We will do our best to answer in the session at the end, but those that don't get answered, we always make sure that we come back to you afterwards those. So with that, Jaren, I'll pass the baton over to you, and I'm certainly very intrigued to see what we've been doing in the company over the last month, and you in particular, in terms of creating new insights into the world of COVID.
Yeah, thank you, Matthew. Yes, overall, I think the message is not too positive that we have all observed. The global development over the last 6 weeks has not been kind of to continue the positive effects of the lockdown that we saw in May and June, but rather we have seen kind of a continuing strong phase one or wave one trend in South Africa, South America, and South Asia, and we have seen a second wave in America and a smaller second wave also in Europe. And so let's look at the overall numbers first. And as you might be aware, we are trying to estimate not only reported cases, but also the true number of infected people based on the methodology, primarily using the total fatality rates as a way to calculate the true number of infected people. And doing that, we can conclude now that overall we expect that 200 million people, or the calculations is that 200 million people is very likely to be infected already since the start of this year. And it's only 20 million reported cases. So it's about 10% of the true cases are actually reported as cases. And these cases are still growing 1.5% per day, which is, and the base is higher than ever, of course. So the growth in absolute figures is higher than ever. We have never seen so many new cases per day. Regarding fatalities, what we see is primarily that younger people are infected. So fatalities is not growing as fast as the number of cases. But already now there are 750,000 registered cases. And we think that the true fatalities might be another 150,000 up to 900,000. This is based on the death above the normal death rates in all countries. And for example, New York Times is summarizing this in their newspaper, and we are using these numbers also. And the number of fatalities per day has grown to more than 7,000, which is also more than the previous peak in April. And many countries have loosened the measures to provide to stop the virus from growing. So we see actually the growth in cases is a result of this loosening. And also we see a record high figure for people in the most infectious stage, meaning that people are really contaminating other people, which is typically day 3 to day 8 after onset. And 11 million people are likely to be in this phase now, which is the highest ever. So let us then look. So here you see actually a model input for us. Along the x-axis, you see the average age in each of these countries. And along the y-axis, you see the calculated infection fatality rate. Then we are using for every 5 year. We did in April research on all the cases so far, and then had a hypothesis on the infection fatality rate per age group and per sex, male and female. And aggregating this and applying it on the population in each country, we get this calculated infection fatality rate. And this is what is going into the model. So since Japan has the oldest population in the world, average 47.5 years, they also have an infection fatality rate at about 1.15. While, for example, many of the countries in Africa has a very young population, down to 20 to 24 years. And then just the same infection fatality rate will be with this age mix between 0.1 and 0.2. So we see here. And mind this axis, because I'm going to use this now several times through this slide pack, just with the same, and the size here is the size of the population in each of these countries. We see United States with a fatality rate of 0.67 calculated, China with 0.45, and India with 0.28, for example. So for the first thing we can do is to look at actually reported fatality rate, which is what we call the case fatality rate, which is reported fatalities divided by reported cases. And again, we see that the European nations, the blue nations, is clearly the highest fatality rate, and this is and also the oldest population, as we have seen. But probably here, the number of cases is underreported by a factor of 10. So getting that into the denominator will, of course, bring this down to the same line that we have done here. So all the countries are underreporting the cases. But still, we see the trend that for the new nations being infected, we will not expect as high fatality rate as we have seen in the European countries. Then let's look at the conclusion we made on this of relevance for the energy market, which is our core focus. Then we made a conclusion in the end of May based on the observations. And now we are for the third time reviewing this conclusion. Does it hold, or do we have to modify it? And I'll just briefly go through it now, and then we will look at some evidence for it. So herd immunity, the first point, herd immunity will not be achieved, meaning 50, 60, 70% of the population being infected. And this is still valid, except maybe from a few countries in Latin America. And we said that the realistic strategy moving forward will therefore be to wait for vaccine to get back to normal conditions globally. And this is likely to take 8 to 24 months. We think this is valid. We think it potentially could last longer than 24 months. Then we saw that the epicenter went from East Asia, Europe, North America, and now to the south, meaning South America, South Asia, and South Africa. And this is still valid, but we have a second wave in US and EU. We also think that inadequate governmental responses would lead to unnecessary death. This is valid. That's a sad fact. And e.g., we see this in South America, but also other places. And new outbreaks are likely, but emerging technologies and adapted behavior will suppress these new outbreaks. Well, we have seen that many times also, but also policies is key. And we haven't seen a big effect of the technologies yet, like this mobile apps. Domestic activity will soon return to 90% of pre-pandemic levels, which is very valid. We see just now in the second section how traffic patterns is back to 90% of what they were. International travel will not fully normalize until vaccination is deployed. We see that as well. Global economy is down 6%. Well, maybe it will be down 8% of the GDP. And new technologies and adaptive behavior will have a structural impact. And we see now a lot of structural impacts that changes that will last. So let's look into some of these details. So what you see here is likely share of population being infected. So this is what is relevant to understand herd immunity. And I'm using exactly the same x-axis, which is the average age in the countries. So we expect that this will have relevance for the death rates, but not really for the number of people being infected. But using the calculations we have talked about, we see that Ecuador and Peru is likely to have already 20 to 25% of the population being infected, and they're still growing quite fast. So these two nations could achieve herd immunity at a very high price due to all the fatalities. Also, Mexico is growing fast, and a few other countries in South America, but more flattening out and less likely to see this grow significantly above 15 to 20%. So herd immunity will not be achieved. And 10%, but the United States is also having actually 12% of the people likely infected, UK 14%, Spain, Italy, Sweden around 7%, while Russia likely 2.5 or some 2%. So meaning that we have to wait for vaccination. We will not achieve this kind of in the natural way, this herd immunity. Then, so we have to wait for vaccination. How long do we have to wait? Well, it's actually at least 165 different vaccines being developed. And here is a summary of all these vaccinations. And as you know, the testing of vaccination has to go through 3 phases. First, the preclinical stage, and then phase 1, 2, and 3. And looking at the different most promising cases, still we see that phase 3, they are just now recruiting people for the phase 3, but the end of the testing, explicitly stated in the documents, is October 2021. So then phase 3 will be ready, and then you could start to implement it broadly into the population. However, in this very special situation, also governments and authorities, yes, medical authorities are indicating that you can start to roll out even before the tests are concluded, if they are still promising. But we, looking at this and looking at so these are the first 6 cases, and you can look in the report for the details. And then we have another 2 pages of cases, for example here, including this Sputnik 5 vaccination that was mentioned by Putin this week. This is only in phase 1 still. So the phase, if I go back, the phase 3 studies are those first 5. Then we have phase 2, and then we have some in between phase 1 and 2, and then finally phase 1. So taking together and see and thinking that we need to roll this out globally to be able to freely and without any kind of considerations be traveling globally again, this might be well into 2022 and even 2023. So this is going to last quite long. Then we last in July, in the report in July, we showed these graphics showing that what will happen. Well, the cases we see that South Asia and South America has been the highest growth areas in terms of fatalities per day, and we could see this even go higher, or we could see this go down if we get better medicines, better treatments, and of course more efficient lockdown measures. What has happened? Looking at this, we see that actually it was kind of the negative case that actually has happened. Cases in South America, fatalities per day has grown from around 1,500 to more than 2,000. Also, we see a second wave in America, in Northern America, growing from around 600 to more than 1,300 fatalities per day. And also in South Asia, primarily India, then Pakistan and Bangladesh, we also see, sadly, a steep, or not as steep, but as steady growth towards 1,000 people per day fatalities. Of course, it's very uncertain what will happen going forward, but we don't see any strict lockdown measures being implemented that has not been implemented before, like we saw in Europe and also in New York and the Atlantic coast. So we don't expect to see similar curves that we saw here in April and May. We expect to see a more slowly flattening out, maybe it's continuing growth from these regions, also in South Africa, which is this one down here. So we are looking at the recent growth, looking at only at the last 3 weeks and the absolute number of cases, again with the same x-axis that you are now getting familiar with Japan on the top and some African countries on the bottom. We see that only 3 countries have 60% of the total growth in cases over the last 3 weeks. That's India, Brazil, and United States, growing with around 1 million cases each. And this is reported cases again. Looking at these countries a little bit further down here, then we're changing the axis to 140,000 on the top. And then both South Africa and Argentina is above this. So there are 5 countries is above this on the axis. But then we see also that Mexico, still Ecuador, Peru, Russia, but also 5 Asian countries, Iraq, Philippines, Bangladesh, Indonesia, Iran, and Spain is the key growth countries as we talk. And this is clearly a second wave growth we see in Spain, France, and Germany, but not so much in Germany, following the reopening of these societies. Then in terms of what are governments handling this in an adequate way? Of course, they need to suppress the virus from spreading through lockdown measures. They need to make sure that you have capacity and quality in the healthcare system, but also they need to balance this to get the economy going so that you get income for the country. And we have seen, I think, some kind of failed country responses. One is related to late lockdown measures that we saw for some countries, for example, UK, US, Brazil, and Sweden in March. And these countries have been suffering a lot due to that. But we've also seen more structural reasons why we see a quite bad development in many countries, like in Peru, and I just use that as one example. 40% of the households that do not have refrigerators, so you had to go to the market for fresh food every day. And many places, all the sellers on the market have been affected practically. So then this is really the way that the infection is spreading. Also, there's a very large informal economy with very crowded and unorganized places to exchange goods and to work. And this is absolutely the case in Peru. Also, you don't have a bank. 62% of the population don't have a bank account. They get funds from the government, but they have to queue up. This is a picture outside the bank to get this cash out. So this is also driving actually contamination, and also with overcrowded homes. Just then, looking at fatalities as a share of population, again, how large in part of the population is actually dead. And this is per million, and Ecuador and Peru is now on the top. Spain is number 3, Belgium, Italy, UK, US, Chile, Sweden, Brazil, and Mexico. And here we have included some of these 160,000 people. That is from New York Times, additional missing death that is not reported, for example, in Worldometer. Then looking at finally slides, looking at the United States, we have split United States, all the states, into 3 different groups: the early reopeners, the slow reopeners, and the middle way. And this is in terms of transit station activity, meaning how many people are gathered on typically bus stations, train stations, or subway stations, or places where a lot of people are gathering, indicating that you have activity to go to work, etc., instead of home office. And this, as you've seen, it was growing from the bottom in mid-April, but it has flattened out over the last 4-5 weeks. But let's see on the look at the effect of these three different group of states. And as we see, the slow reopeners, they have really, and this is on the right-hand axis here, the double lines. This is the reported cases, and they have not. They have only have a slight second wave, while the early reopeners have really a boost of cases. Now with more than 30 cases, so almost as many cases as you, or actually more cases than you had in the Atlantic states in the March, April. So more people are infected today in these states relative to the population than we saw in March and April. But primarily younger people are infected, so we will look at that. And a consequence of that is that you get much fewer fatalities. So looking at the fixed line here, we see that the slow reopeners, then fatality rate is still declining to only 0.1 person per day per 100,000 population. But the reopening states have really tripled the number of fatalities over the last 5 weeks. And in July, we looked at this, we saw this increasing, but we didn't see any change in fatalities. And we asked some questions, what is happening? But what is happening is that it was all the young people that were infected. And after 5 weeks, they are starting to transmit the virus also internally in the families to the older people. And that's why we see a growth in fatality rates. Also looking at some of the big states, New York as a comparison, and then Florida, Texas, and California. And again, relative to the population, we see that Florida, for example, have had more contaminations than the versus the population than we have seen in New York. Texas and California slightly less. And then in terms of fatalities, much lower than in New York. New York had at the peak 5 persons dead per day per 100,000. What we have seen now is up to 1, so only 1/5 of this. This is primarily because, again, we have much younger people being infected. And remember the curve that I showed you on the infection fatality rate. When you are taking down the average age, you're exponentially taking down the fatality rates. So just this last slide here, that we see the structural changes. We see cycling booming in many cities like New York City, Chicago, Beijing, and Europe and London. We have seen the growth of sale of bikes by 67% to 1000%, tenfolding, for example, in London. We also see infrastructure changes with 50 to 130 kilometers transformed from car to bikes. So let's look now at the details of the energy market. And Per Magnus, what is really the impact now in the energy market?
We are very far into the second wave, and the 2 scenarios that we have is effectively about the difference between our base case, which is more or less assuming that we are through the base case, through the second wave, and then in the second wave scenario, we assume that we are actually entering an even more severe second wave in North America and Asia and Latin America. So the base case is more about, yes, we have seen a second wave, and we are more or less through it. And we have also received a lot of actual consumption data. And as you see here, that we still have an impact on oil demand that is more than 10 million barrels of lost barrels. We have 2 scenarios for the oil demand. It's a base case where we actually are quite far into a second wave scenario, and then we have an alternative scenario, which we call the second wave scenario, which is a quite drastic scenario where we consider that you will have a quick new wave of cases and lockdowns, especially in the southern states of America and Latin America and India. So what we are looking at the data, what we are seeing in the data now is that global traffic has very much actually stalled. And especially in the, as you see on the right side, the Middle East has seen a definite second wave in late July and early August. Is very much driven by Iran. And on the left side, you see for every country what is the traffic status in various countries. And the upper side, we see that in Brazil, even though cases has developed quite negatively, traffic has come back. So they are loosening up a little despite the case situation. In China, all the traffic data improved very much until mid-July, and then it has stalled. In France, there has been a quite negative situation with new restrictions, more work from home, and we see that very clearly in the traffic data. You see in Germany, they had a very good and effectful management of the disease and the spread. They have come back to normal. India improved maybe a little prematurely, and then it stalled at 20% lower than normal traffic level. Mexico, despite negative case situation, we see that the traffic is coming back, not as fast as it did early July. And similarly, you see Russia more or less back to normal, maybe prematurely. United States, even though cases has increased in the southern states, we see that traffic is not really falling, but it's stalling. And similarly, in many countries like South Korea, we just see that the traffic data is not improving. It is more stalling. So that indicates that going forward, the risk is, or the kind of realistic risk is stalling, not really falling of traffic and gasoline demand. Now we look at flights in various regions of the world, and you see that for each region we have international flights and we have domestic flights. And within each region, a domestic flight is a flight within the country, not within the region. And you see that even international flights outside the country, but most of all within the region, has actually been increasing a little over the last month. And domestic flight has increased quite significantly, especially in Europe. And then you see falling back a little, actually, because the government has reacted to the case development, and flights peaked early in the summer, but it's now falling, both a consequence of new countries becoming red, and also as a consequence of the summer peak. The natural summer peak for vacations is also going back to normal. So that is more or less a situation in most countries. We have seen a summer peak of flights, quite positive for jet fuel demand, of course, but now going forward, given the case development, as Jaran just told us, there is no upside really on the flight and the jet fuel consumption. We have seen a summer peak. We are now coming back to a lower and normal level for jet fuel demand. Digging a little into our extremely detailed data on jet fuel demand, and this is a barrel chart for jet fuel, and we see that it has just for these three countries selected, Spain, Italy, and Greece, it has of course been extremely low since March. And now, given the vacation and given the opening of many countries traveling to Spain and then back from Spain, Italy, and Greece, that is what is driving this barrel demand, is the returning from these countries to the home countries. We see that the demand of jet fuel in these three countries in Europe has actually multiplied quite significantly. And you see, for instance, in Greece, most of the jet fuel demand is driven by vacation, and it has been back to quite significant demand levels for jet fuel. And now looking at the global demand for all kinds of liquids, meaning gasoline, diesel, LPG, bunker, and all kinds of liquid petroleum and biofuels demand. Of course, it was a clear bottom in April. And then we have also received quite a lot of data in the past. So you see also that we are providing the revisions from last month when we presented to you early July. You see that we have done quite a lot of revisions, especially in the alternative scenario. We think that the alternative scenario, the worst case, is now more or less experienced partly in the July data. So the alternative scenario is not so dramatic this time as what we saw 1 month ago. And when we look at the global oil demand in terms of fuel, we are in this chart, we are grouping the fuel demand in gasoline, diesel, which is road fuel in the green columns, and then jet fuel. Of course, jet fuel doesn't really contribute very significantly for absolute demand, but it is contributing very significantly on the impact side. As you see going forward, jet fuel will contribute to almost half of the impact on the oil demand, while it contributes to almost like 7% or something for the absolute fuel demand. So because of the severe relative impact, jet fuel is the main challenge for refineries to figure out how they can actually process the jet fuel, which is a kind of natural product of the refining, but it's not in demand going forward. Then we are looking at the same data, road fuel, jet fuel, all kinds of other fuels for United States here. And then we see that, yes, when it comes to active cases, it was very promising last time we talked to you a month ago, with a bottom in the case activity, but we already then saw a trend of new cases, and that's what you see on the upper left chart, that for US we have definitely been in a second wave, but we think it's more or less controlled now. There will not be a kind of more severe second case. We have seen the worst on the case side. And on the traffic, this second wave didn't really result in less traffic for the country aggregated, but flattening out because of lower traffic in the southern states, California and Texas most importantly, and then in other states traffic came back. So aggregated, the development for the country was more flat than getting more severe. And when you look at then the impact slide, we have actually revised our impact scenario quite a lot. We have got new data for April and May from the government, and we think that going forward, we keep our scenario that the impact on US oil demand is still in the range of 2.5 for September, and we don't see very significant improvement, but of course some improvement oil demand going forward in the United States. And then we look China. No kind of significant revisions in the past. We were quite correct in our outlook until April, and then we have revised down our outlook. As you see in the dotted spots, we were a little more negative than what we are today on the absolute demand in China. Going forward, we think that this will flatten in August, September, and no significant increase of demand of total liquids, gasoline, diesel, and other fuels in China. And you also see on the upper chart here that the cases actually increased in the past. We think that it's almost a full control in China despite the history, and going forward we don't expect any more severe situation in China. We think that demand will flatten out in September and then come slowly back to almost normal level by 1 million barrel impact from normal oil demand in China by the end of the year. And then looking at India, you see that in India the normal demand is about 5 million barrels, and that the impact in April was 2 million barrels. We also know that in the cases from the upper left chart that the cases has just increased in a very kind of critical way. But now finally we see that it's flattening out, and you also see that traffic and demand for gasoline and diesel came back to almost normal level, less 20% early July, and it has stalled on that level, and we don't see that it can actually get more severe going forward. But flat, not coming back. If you see in the lower right chart, we think that the China demand has come back to a normal level, less 500,000 barrels, and it will more or less stay at this level till the end of the year, and no kind of significant improvement. It will develop slowly in India. Similarly, we are looking at Southeast Asia, a very important region both for oil demand and also because that impact has been very severe, and still we see that about 1 million barrel of gasoline and diesel LPG demand is taken off in Southeast Asia. Some improvements, but you see on the upper left chart that the cases we don't see yet any kind of calming down and stagnation in the case development, and you see that the traffic has been flat at something like 15% lower than normal levels, and that is what we are seeing going forward into the next year for Southeast Asia. In our report that is coming out very soon, we have this table, and there you can look at the detailed numbers, and you see here, for instance, that globally the oil demand in 2020 we expect it actually slightly lower than 90 million barrels of total liquids demand per day as an average for the year, which is 10% lower than normal levels. Now looking at all this demand impact, what does it imply for the supply response, and then about the balances. So OPEC, we have to look at the OPEC, the countries that has committed to cuts. That's the black line here, and the dotted line is what we said to you a month ago. And you see that the output from the committed countries has actually been in July slightly higher than what we thought, meaning that they have done as they promised, but the additional cutters like Saudi Arabia, they were cutting more than what they promised as targets in June, and in July they did exactly what they promised. And then of course the dotted orange line is what OPEC, the committed countries, has said about coming back of production in August. They said that they will, from a target of 34.4, they will come to a new level that they will keep to the end of the year of 36.3 million barrels of crude production per day from August and out. And we have actually seen that they have actually produced that amount of oil almost perfectly in August. And going forward, we think that the committed countries, and then adding Venezuela, Iran, we see that going forward, we forecast continuous growth at a steady level in August of 38.3 for all the OPEC and the allied countries, including Russia, will in August be 38.3. And going forward, we see that there is room, and there is quite strong motivation from the OPEC countries to increase production going forward. And then looking at the status for US shale. So the activity metric that really matters for US production is not the rig count, it is the frac count. And thanks to satellite data, we have actually seen that in July, the frac activity was increasing. So even though that rig activity is declining, we have seen an increase of frac activity, meaning that the so-called DUC inventory has been depleted in July, and we have seen a comeback of frac activity, almost in the range of 40% for July. But still, of course, on the production side, it's we will come back to that. The balancing point for number of wells to be fracked is higher than the current level. But everybody's talking about the kind of financial situation for the US companies. And here we are looking at an interesting metrics, which is the debt on the balance sheet held by companies entering the Chapter 11, which is a bankruptcy protection system for the American companies. And you see that over the last 4 months, every month we have had new bankruptcies covering something like $10 billion of outstanding debt for the companies. A very high level, and it has been quite robust at this level of $10 billion every month of debt held by Chapter 11 companies, and we think this will actually continue going forward. And of course, this doesn't mean that acreage is disappearing. It will sooner or later come back in the M&A market, but of course it contributes to slowing of drilling activity in the US. So what is the impact of these, or the fracking activity and the financial situation of the companies, and then coming back of the curtailed and shut in production, is that we think that oil production as we speak is very close to 11 million barrels per day from the US as a whole. And it is going to stay at this level because at the same time as you have declining base production, you are still seeing shut-in wells coming back. But we don't see any potential for growing production. And actually we have revised down, as you see, our production scenario for late this year and early next year. And we don't see any growth happening before far into next year. By the mid of next year, we think that US production will increase because of the oil price situation, which is driven by the global supply and demand that we are going to cover later. So this US production is just a function of the WTI price, and we think that there is not a lot of room for new and increased oil production before around the mid of the next year now, and this has been revised down quite significantly since we presented this last month. So when it comes to global supply and demand, of course April was just the worst month ever in the oil demand history. Then May, it improved a lot thanks to the commitments from the OPEC. And in June and July, we saw fantastic balance given all the demand cuts. But still, going forward, we think that it's not room for any continued draws of the global storage of products and crude. We think that the market is actually balancing quite well now in August. Going forward, we actually think that there is more potential for a slight glut than draws of when we're talking about products. But of course, what most people is following is the crude storage, The refinery runs, we are not showing this in this chart, but the refinery runs are actually quite high. So even though we are showing a glut going forward on the liquid storage, the product storage, we think that on the crude side, there is potential for some draws going forward, but we don't show that in this chart. So the impact on the prices and the crude prices is not as negative as you might see in this chart, thanks to very kind of stubborn refinery runs in the next 2 months. Here I'm showing something quite interesting on the M&A market. The prices, of course, many companies want to sell assets, especially driven by this Chapter 11 and the bankruptcies. So there is a lot of sellers, not so many buyers in the M&A market. The prices has fallen even more significantly than the crude prices. And it's actually possible to pick up undeveloped assets for less than $1 per barrel in the global M&A market as we speak. Despite these very low prices, there is very little activity yet in the M&A market. The high column for July is the Noble divestiture to Chevron, where you see the split of our valuation on US and mid-Mediterranean for Noble, first of all, in July. And we have very detailed data on all the M&A assets in our dashboards, so you can look at this data on our client portal. Then about renewables and E&P, I think it's extremely interesting. It has been a lot of speculation what is happening with renewables now with the COVID situation. So despite this extremely nervous cash situation coming from the loss of oil and gas revenues, the oil companies has not really reduced at all, I would say, their commitments on renewable investments. And the situation as we speak is that some companies are extremely aggressive on their on the renewable investment strategy, and this chart is showing the commitments in terms of gigawatts by E&P companies and the time when they actually commit to those new capacities by organic or inorganic investments. And you see that on the upper side you have BP and Eni. Eni is more kind of careful in the timing of the commitments, and BP is extremely clear that within 10 years they will actually on gross capacity they will own grossly 50 gigawatts of capacity of renewables power generation. And you see, for instance, Total is up there very aggressively, about 25 gigawatts committed in gross capacity ownership within a little more than 5 years. Equinor is also a very ambitious company on the renewable investment side. And you see, for instance, that Galp and Repsol are E&P companies that has developed a very committed and clear strategy about renewable investments going forward. So that was what I wanted to contribute today. I hope that we can have some time for Q&A going forward. Thank you, everybody.
Yeah, great. Thanks, Per Magnus, and thanks, Jaren. I think it's great to revisit some of these topics now that we're doing it monthly and really see how our views are changing. And I guess there's been some fairly sobering statements, but intelligence that I think a lot of people can take away and start applying to the decisions and the outlook within their various businesses. There's been a few questions come in. I'm just going to pull you up, Per Magnus, quickly on the very last slide that you showed around renewables and of course the E&P ambitions going forward, and them really not stepping down. The question was, how much of this investment is related to real named projects versus just kind of investment ambitions? So how much can we kind of believe in them actually delivering on this?
Now, the chart I showed is very much given by the commitments by the companies, but in our detailed data, you can actually go into each company and you can see exactly location and the capacity of both decided and undecided projects by company. But the chart was just what are the companies saying, and then you can go into our data and figure out what they have actually already decided and what is undecided, and the location of each project.
Yeah, no, absolutely, and I know that's something we of course pay a lot of attention to internally with our renewables database, where we're actually tracking and following all these named projects, the statuses, and of course the roadmaps for them. And I guess just a continuation on investments and the decisions. There have been a couple of questions specifically around sanctioning of upstream projects, and of course we've seen an obvious slowdown, and do we expect to see more sanctioning taking place in 2021, or do you kind of see this being kind of fairly low for the foreseeable future?
On the renewable side, I have to say that I'm quite surprised of the persistence of the E&P companies to still commit on renewable investments, despite the extremely negative cash situation that they've had. They have actually cut on dividends, which is more or less unheard for E&P companies to cut dividends, but they haven't not significantly cut on the renewable investments. So I think it shows the kind of integrity of E&P companies when it comes to commitments and green commitments and emissions. They have cut on the dividends. That has hurt their shares and the stocks, of course, but they haven't really reduced on their green commitments, which is surprising, and it just shows the dedication of the management to the energy transition.
Yeah, good. And I'll throw this one to you, Jaren, because I know this is something that you've been kind of very active in working on, and then the question just came in terms of our demand data that's been shown. Are we kind of consensus, and what's our methodology, and how regularly are we updating this demand to create the types of views that we're showing?
Okay, yeah, I think as you saw in the pack, it was actually day-by-day demand data. We have that for flights, we have that for car traffic and truck traffic, and also actually for marine traffic. So we are now using multiple sources, including satellite photos, to track, for example, trucks. So and we will, maybe I can say that in not too far future, launch a product also what we call the real-time, which will be day by day broken down to thousands of cities and regions globally, global consumption of energy. So really our target now is to have very present data on the demand side.
Okay, great. And I guess finishing off, I don't know if either of you want to stick your neck out on this one, because there has been a few people asking this, and this is really just what's our view on price kind of in the short to medium term. And of course there are different voices in the market, some more bullish or bearish. What are we kind of saying within our oil markets team in terms of where we see oil price in the short to medium term?
Yeah, I think that 1 month ago, we were very uncertain about which way the oil price would go. I think that we have experienced a second wave in July, and we have seen the impacts of that. I think we feel just more confident now on the development going forward. and it is just the supply and demand situation is such that there is not a lot of room for improvements or new fall in the oil price, but we are relatively bearish. So we don't think there is room for significant improvements on the oil prices towards the end of the year, but we will stay in a range where the oil price is today for some months. The supply demand situation is more negative in the short term because demand or end consumption is stalling until October. Refinery runs are actually quite positive, and surprisingly, refineries are increasing their runs despite fairly kind of stagnant end consumption. So the oil prices will be supported by stubborn refinery runs until the end of the year, in our view. But also for next year, we don't see a lot of potential for oil price increases before the mid next year. But from that time, we actually think that oil prices can respond very significantly. And into 22, we see a spike in oil price, not extremely large, but very significantly already in 22.
All right, great, Per Magnus. So that's the word from the experts on what we see going through 2020 and into 2021. I just want to thank you both, Jaren and Per Magnus, for taking the time out to share your views. I know people really appreciate it, and you have both developed yourselves to be kind of core thought leaders around COVID and the immediate impact it's having on the energy sector. So thanks, gentlemen. Thank you, everybody, for dialing in. Please continue your questions. We'll make sure we get back to them. And of course, if anybody wants more insight into this content, we have, of course, a lot of comprehensive reports and data that we deliver, and we're more than happy to understand anybody's specific needs, ambitions, and ways that we can support you. So thank you. Have a great day, everybody, and look forward to seeing you at our next session. Goodbye.